Hello and welcome to the July edition of Seattle Apartment News. I'm Matt Johnston with the Simon Anderson Multifamily Team here at Kidder Mathews. Today we are lucky to be joined by Ben Garrett. Ben is a fellow Kidder Mathews broker. He has over 20 years of experience in the office sector, specifically advising tenants in the Seattle office market. Ben's been through multiple cycles and has really been around for a lot of the rapid growth and expansion that we've seen here in Seattle. So we're going to talk to him a little bit today about Seattle's current state of the office market. But Ben, feel free to introduce yourself, share a little bit about what you focus on and your background.
Yeah, thanks, Matt. Glad to be here. I'm Ben Garrett. I'm a Seattle office broker. I've been here at Kidder Mathews for 20 years. I'm a lifelong Seattle area resident. My business is focused entirely on representing Seattle office tenants and site selection and lease negotiations. Seattle office market, we like to say, is anywhere from SoDo in the south up to Northgate. And then from time to time, I find myself on the east side as well.
Awesome. We wanted to sit down with Ben specifically today, as a lot of us feel we're at a bit of an inflection point when it comes to the Seattle office market, business climate. We've been tracking a lot of headlines, some positive, some negative, about companies growing in Seattle, winding down a little bit in Seattle, and things of that nature. So we wanted to discuss all these things because they drive operations for apartment buildings in Seattle and the Puget Sound region in general, in terms of operations for multifamily owners. So kind of setting the scene a little bit, big picture, where do you feel like Seattle and the office market in Seattle stand heading into the second half of 2026?
Sure. We are coming out of a period of great difficulty for our office market. You hear good news, some AI leasing announcements, and that's wonderful. They call it the green shoots going on right now. That said, we are very challenged. There's simply too much office space. A lot of it is in older Class B or C type buildings that are becoming obsolete. So the downtown CBD has a vacancy rate of 34.9%, and that's astonishingly high. I wish it was lower. It's going to take a lot of years for all the vacant space to be absorbed. And we like to say that COVID did to the office market what e-commerce did to retail. It just made bad product obsolete. You look at Sears, JCPenney, Bon Marché, it just doesn't exist anymore. Unfortunately, that's kind of the Armageddon scenario for a lot of owners of obsolete type office product.
That makes sense, and that's a great analogy. In terms of vacancy, the elevated vacancy that you talked about in the Seattle office market, do you feel that that vacancy rate is going to continue to climb, or are we kind of reaching a point where the increase is actually slowing down a little bit?
The increase has definitely slowed down. It's plateaued over the last few quarters. It might creep up ever little bit over the next couple quarters. Sometimes the data lags the actual lease commitments because the tenant hasn't moved in yet. But hopefully we are turning a corner here and things are getting better coming out of COVID. Though the way we work has changed and companies have all had to find their own path. And it's an interesting new world of work that we live in.
And you also talked about absorption a little bit. In terms of absorption downtown, especially for the Class A product that we talked about as being the most in demand and popular right now, are we seeing tenants take more space than they're giving back in that part of the market?
We're not quite there yet in downtown Seattle. Absorption is still negative. Companies are giving up more space than they're leasing. Actually, over on the east side this past quarter, there was positive absorption, which is nice news. But we have a long way to go before we're seeing positive absorption. We're getting closer.
Yeah, that's good news. And I think we're both confident that we'll continue to get there. In terms of tech and AI, I know you advise clients across a handful of sectors, but everyone wants to talk about AI. It's very much in the headlines right now. In terms of AI driving office demand, we hear that, but then we also hear fears of AI eliminating some jobs in the tech space. How much of that is showing up in real leases here in Seattle versus just headlines?
It's absolutely showing up in real leases. Anthropic just announced they're going to expand. They already planted a flag here, but they're going to grow up to 130,000 square feet or so in Dexter Yard down in South Lake Union. Over on the east side, Databricks has expanded significantly. OpenAI signed a very large lease to expand earlier this year. And we're seeing the legacy tech companies like Microsoft and Amazon, they're not expanding. But AI type companies are growing, and it's nice to see that growth. Down in San Francisco, they're really going crazy. Historically, we lag San Francisco by say 12 to 18 months. If we'll get caught up and if AI is the saving grace of the Seattle office market, it remains to be seen. But yes, it's a very interesting question. Is potentially going to eliminate a lot of jobs. Will that mean other companies take less space? And I think it's too early to know. And anyone that tells you that they know probably doesn't actually know.
Yeah. Yeah, in terms of San Francisco parallels, we see that a lot with apartment fundamentals as well, where we tend to trail them by a certain amount of months, and rent growth or increases in occupancy and absorption as well. And hearing a lot of good things coming out of the Bay Area. So hopefully that continues to work its way up to Seattle. As far as beyond AI, are there any other tenants or industries that have surprised you with recent commitments to Seattle or growth in Seattle?
Nationally, and then a little bit locally, we're hearing about law firms taking more space. For years, the conversation with them was, oh, they have these archaic old offices and giant law libraries, and they're all downsizing. But they're definitely competing for talent, and having a high profile, nice office that their clients come to in a big all-star city is important. There are several law firms locally that have upgraded their space. There are a couple national firms I can think of that have recently come to Seattle. I would say that law, it's not like they're all the same and they're all growing like crazy, but big law in particular has been a bright spot of sorts.
Interesting. And what's your read on, are a lot of the expansions that we're seeing in Seattle for AI tech, law, what have you, mostly local names known to us, or are there new market entrants that have their sights set on Seattle?
It's both. A lot of these new market entrants have had offices in Seattle for quite some time. They opened in the 2010s or even sooner. And then the local big players we talked about, Microsoft, Amazon, they're right sizing and they're figuring out how to utilize their space. The ones that are growing are usually like San Francisco companies that have come here.
Awesome. And we obviously hear a lot about parallel narratives between Seattle and the East Side, and a little bit of friendly competition there in terms of what's going on in the office market. How would you compare what's happening in Bellevue's office market right now versus downtown Seattle?
Yeah, topic that's on a lot of people's minds. We chat about it quite a bit with clients. It seems over the last 5-6 years, there's been a bit of Bellevue envy from our Seattle clients, and oftentimes they want to investigate a move over there. The price per square foot delta is significant enough that typically Seattle companies stay on this side of the lake, but not always. You can't deny that the business climate in Seattle could be friendlier. There's a B&O tax, a head tax, and these are significant considerations for CFOs. But when you look at purely occupancy costs, a Class A space in downtown Bellevue is, call it, mid-60s per square foot, fully serviced. Downtown Seattle is, say, mid-40s per square foot. So that's a big delta. Remains to be seen how this all plays out. I wouldn't say Seattle is a lost cause. This is a world-class city. We have an amazing waterfront, the iconic local market. We have some transportation and some locational advantages. This is really the hub of the Western Washington area. So commuting patterns are better served with real estate in downtown Seattle. And I think we'll get through this.
Yeah, recently the World Cup energy downtown, I guess there's probably a little bit of a weather factor involved as well, being into the summertime, but it's been a huge bright spot. Our office is obviously here to Union downtown, and the energy's been great to see throughout the city. So Ben, we talked a little bit about Class A office space. What do the trends look like in terms of the quality divide right now? Are those Class A trophy top tier properties recovering better than older Class B, Class C properties?
This is a huge theme in my business right now. Class A properties are outperforming by a wide margin. You look at what we call commute-worthy real estate. Is the building sexy? Does it have amenities? Does it have a gym? Might we be able to get employees excited about going to it? Those are the types of buildings that companies are gravitating towards. The Class B and C stuff, maybe not on the best block, no views, no amenities, 50, 60 years old. You're just not going to get people excited about coming back to those. So yeah, the flight to quality trend is huge these days. Companies that a lot of times they're coming off a 10-year lease, they signed pre-COVID. So they look at, hey, what are some of the best buildings around town? Okay, we don't need as much space as we once did. Maybe they're working hybrid, Tuesday, Wednesday, Thursday is what a lot of companies are doing these days. And you do some smart space planning, you just don't need as much square footage as you once did. So you downsize a little bit and you go look at these nicer buildings that have higher rental rates, and you can take a great space and sign a long-term lease and trick the space out and pay the same amount of total rent as you were paying in an older, more obsolete building just because you had a bigger footprint. So that's huge. So when we say, yeah, these Class A plus buildings are winning more deals, that's true. It's still tough sledding for landlords. 10 years ago, say you're targeting a full floor tenant in Seattle, you're trying to land them as the landlord. You give them $60 or $70 a square foot in tenant improvements, and they could build out the whole space for that much. You just had to give them a couple months of free rent, and the rental rate was pretty high.
Yeah.
Now, 10 years later, the world's gotten so expensive. To construct office space is double the cost. To land a great quality credit, full floor type tenant on a 10-year deal, you need to give them $150 to $200 a square foot. You need to give them 10, 11, 12 months of free rent. Costs have just kind of gone crazy. So what that means for landlords is they might have 80 or 90% occupancy in their trophy building, but they used to get paid back in 2 or 2.5 years. And now fast forward 10 years later, it takes 7 years to get paid back. And that's not the best business model for them, unfortunately, but you've got to have tenants, and those are the breaks right now.
Interesting. Yeah, we're seeing a lot of that in the apartment space as well, as far as investment sales and for renters. There's a lot of supply out there. There's a lot of inventories listings on the market. And what's getting the most traction is quality, to your point, amenities, newer construction, or nice remodels in really good core walkable locations. And if you don't have that, you are likely going to pay for it as far as pricing goes. So on the topic of Bellevue and the East Side, do you feel like the strength and growth that we've been seeing and hearing about in Bellevue is starting to spill back into Seattle and spur more activity in Seattle, or are they very much separate stories?
Interesting question. Yeah, you look at Bellevue as a Seattle-centric broker. I think Bellevue's a little bit car-centric. There are a lot of chain restaurants. Seattle's walkable. It has a certain je ne sais quoi, maybe a little grit, a little vibe to it that a lot of younger tech workers like. From a market fundamentals standpoint, the Bellevue office market in the downtown CBD, which is where big companies, what they're attracted to over on the East Side, it's a much smaller market than the Seattle office market. Here in the Seattle CBD, let's say there's 50 million square feet of space. It's 34.9% vacant. Call it 15 million square feet of vacant space. The amount of vacancy here in Seattle is equal to the entire downtown Bellevue CBD office market. There's about 15 million square feet over there. So that kind of puts it in perspective. I suppose at a certain point in time, when you consider there have been no new office buildings constructed in the last several years, except for a couple little ones over in Bellevue. If Bellevue fills up, yeah, tenants will look to Seattle, but it's not to say tenants aren't considering Seattle currently. Bellevue's just always in the headlines, and it's a hot topic to talk about Seattle versus Bellevue.
That's good to know. Yeah, and on Puget Sound, I guess regionally speaking, you work with clients that have footholds across the country. How do you feel like Puget Sound, generally, Seattle, Bellevue, et cetera, how do we compare from this recovery trajectory that we've been on since the pandemic versus other major markets in the country?
Yeah, it's interesting. Versus other tech markets, we're definitely lagging. For whatever reason here in the Seattle area, it's been harder to get employees excited about coming back to work. I think a lot of that has to do with we're just a tech-heavy place, and it's ironic tech companies were gobbling up space in the 2010s, and then COVID happens. They're the first ones to retreat, say that they're never coming back to the office again. To that end, having legacy companies like Microsoft and Amazon with longtime tenured employees who can work from home and have families and don't need or want to go into the office, it's been easier for those employees to do that there. So I think all that kind of contributes to our market struggling more than other tech markets. So you look at New York City, which is, of course, also a financial capital of the world and our country. It's also a big tech hub. They're doing a lot better. Their office market fundamentals are than Seattle. Same goes with San Francisco. And that's almost entirely AI driven, as I understand it. It's just crazy down there right now. So hopefully some of that demand spills up to Seattle, trails it by 12 to 18 months, and we benefit from it.
Awesome. Yeah, I hope so too. And I guess on the bigger picture, we and a lot of our clients who own multifamily properties in Seattle closely track what's going on in your world in the office market in Seattle, because employers growing here, hiring employees creates strong tenants and drive strong fundamentals in apartment properties. When companies like an Anthropic sign a large office lease in Seattle, how much of that translates into local hiring versus just them taking space for flexibility and kind of future growth here?
Sure. I think it's a little bit of both. They're going to lease a ton of space. They probably intend to fill it up with employees, whether that happens immediately or not. I think a lot of the growth is phased in, so they're accounting for future space, but they want to take great spaces in nice areas and try to attract talent. And Seattle has a ton of tech talent. We're a hotbed for that. Microsoft, Amazon, all these talented software engineers, they want them, and they're going to get some nice space. And I would suspect that, yes, it's a good indicator.
Yeah, we've always talked about in the apartment world that tenants want to live where they want to wake up on a Saturday morning. And so back to your point, even if they're working in a different part of the city or even on the east side, the connectivity here back to Seattle with the light rail expansion going over to the east side and things like that, I think caused us to remain really optimistic about the future of Seattle from on the apartment side of things. And I guess if you were speaking to our audience, which you are in terms of apartment owners, what employment or office trends would you recommend they be watching as signals for maybe a green light for them to continue to grow their portfolio here in Seattle?
Great question. We can get really granular with our office market statistics and look sub-market, neighborhood to neighborhood. Your comment, people want to wake up on a Saturday morning where they work is true. I think you look at sub-market specific stats, and if this sub-market's doing great and space is getting gobbled up, positive absorption, like, sure, maybe you focus more towards it. But we're certainly at an interesting time. AI remains to be seen if it's going to save the office market or if it's going to put people out of jobs. And it's, wow, what a time to be alive.
Yeah, absolutely. If you had to leave our audience with one reason to be optimistic based on what you're seeing and hearing on your day-to-day and in office leasing in the office market as it pertains to Seattle, what would that be?
Absolutely. So I think these AI space announcements are great, and they show us, hey, we're not solely dependent on Amazon and Microsoft. We're spreading the wealth a little bit here. And this is really a wonderful area with a they say one of the world's most literate cities with the University of Washington, all the tech talent here, all that we have going for it, this amazing summer weather. It's 80 degrees every day and no humidity. People want to be here. I think Seattle has its challenges, certainly, and Bellevue's won a few deals recently, but things change and we've got a lot going for us here. It's a wonderful place that we choose to live in, and I don't see that changing. I think people will always gravitate towards Western Washington, this little slice of the world.
Ben, thanks so much for joining us today. It was really fascinating hearing about what you're seeing and hearing on a day-to-day basis in the office sector here in Seattle. And I'm sure our audience learned a lot through what you had to share. If you do have any questions or needs in the office space, we'll include Ben's contact information in this video. Other than that, please reach out with any apartment needs to any member of the Simon Anderson Multifamily Team, and we hope you enjoy the rest of your summer.